Okay, so well, today is the 6th of June. It's 11 a.m. Singapore time. And Sherman here, and let's look at some of the questions. Well, let's have a look at some of the charts, and then we'll take some questions. Maybe one more, just one or two questions, right? So let's have a look at. Let's just have a quick look at Alibaba. So one of my time factor traders was looking at this trade, and it looks like it's doing quite well, right? It's doing quite well. So the trade at the time, we were looking at something like this. Right? So at the time, we were looking to pick this bottom over here. So if you're looking to use time factor to help you, basically, if you want to take the buy, it'll be somewhere on this side. So you're looking for buys here. Not the buys here. If you take the buy here, wouldn't be expecting this top to be broken. So you're looking for the buys outside the box, right? This is something time factor traders take special note of if they want the top to be broken. So if eventually you took a flag somewhere here or here, or for any reason you took some buy here, that's why we will speak of flags. I don't know, on 15 minutes, that might look like a flag, something. So let's say you go to 1 hour, that might look like a flag. So, okay, pardon the slight cold, flags like that. But if you had taken this kind of trades, well, it's most likely not going to break the top. So if you found this on this side, well, it's worth taking. This one probably have gotten into some kind of drawdown, right? So, but the idea is some people actually decide to just buy the low because you never know. This flag, sometimes they go and then they can pull back. So what people do is, since they know they want to put the risk just below this low here, so kind of factors on the side. So support, resistance, supply, the bottom of traders can actually use time factor price action. So this price action with time factor built in before they actually decided to take the buys to go break the top. Right, the top was broken. So, all right, I think let's call him Mr. N because his name starts with N. All right, so Mr. N's sister, his sister was looking for a buy on Alibaba, so they bought the low and they got to the top. So good for them. Good for them, right? Let's look at oil. So if you're an oil trader, long term, this one we had a prediction this was going to go up, right? So it's doing exactly there at the moment. Okay, so let's have a look at what this is doing. Just put a couple of trend lines on first. 1, 2. The count is 1, 2, 3, and this looks okay. So at some point you're looking for a move back down, right? So this is what it's going to look like. You're looking for 1, okay, you're looking for like a 2. Here or here, both could work. Both could work. Depends on how we decide when the third wave actually starts. So one way to do it is to use a multiplier, and we'll see how that turns out, how that works out. So let's just see what we get over here. Let's see what the time factor is for this one, okay? Just see what we get. Well, this could be all the time actually. This could be all the time. In fact, I would say this is actually one move up like that. One move down, one move up, and then this looks like a 1, 2. Best would be over here actually. This counts a little bit. It's a bit awkward. No. When we actually learn how to do the wave count, normally what we would do is to simplify the whole thing. But just simply say 1, 2, 3, 1, 2, 3, 1, 2, 3. But if you really want to go to nuts and bolts, that this wave counts can actually be quite tricky. There's like what we call 5C1s followed by the ABC type of counts. So, but I think to keep things simple and decide where the trade is going to go, I wouldn't dive right into how I actually count this, right? Because otherwise it's going to be quite complicated. So I can see in my head how I would count this, but I don't think I would elaborate too much over here. It would just take too much time. Right, so what I would simply say is this trend over here was broken. Okay, this trend over here was broken. So there's now you have one move, a sharp move, correction, another sharp move, and this is pulling back. So there's a time factor that's going to be built in. But the idea for this trade, right, is you're actually very interested to sell this if you can get to an appropriate level. So this level is pretty what I call congested over here. And there's a move coming out that's pretty strong. So I would say anywhere in this zone, right, is where you would be quite interested to look for yourselves. Right, it's right about here. If you crop somewhere here, definitely you're looking for another move back down to break this low. So I would say at this point in time, oil could crawl, and then there should be a move that's going to drop it all the way back down, or whatever that is. All right. So that's a thought for crude oil. Right. On the long term, I think there's a move down. Now, if you want to trade this up, let's go have a look at that. Okay. Let's see what it says. This time like this is pretty fast. 1, 2, 3, 4, 5, C1 followed by A, B, C. I would not trade this. This could pretty much do anything, unfortunately. Right? Could do much anything. So let's just measure. It could be running flat even. And you never had to hit the trade too. So it could be pretty much be anything. I wouldn't touch this. This is a tricky kind of trade, right? Even if there was a flag here, let's say it became a flag this way, even if you took the buy, yes, it might go, but it's better to let it go and then let it pull back this way before you actually buy it up there. Then you know your stop will be below here. Because whenever a trade pulls back, the chance of it is basically searching for orders in order to go back up higher. So it's better to let it break, form a flag, break, pull back before it goes. So you really don't want to do anything with it right now. Right? So just leave this guy alone. I would say just leave this guy alone until next week. Come back to it. Or Bitcoin. Let's look at what Bitcoin is doing. Okay, so what do I think Bitcoin is doing? Okay, let's have a look at Bitcoin over here. So it broke out of this trend line. It will most likely be actually just the one. Hold on, let me just shift this down to one. On the daily, what am I getting? On the 4, what am I getting? Okay, 4 hour, we are getting, let me see. 1, 2, 3. This could be 1, 2, 3, C1 move, right? Time factor swing, so we call it 1, 2, 3, C1. Okay. Or call it 3C1, 1, 2, 3, a correction, and one more down. So it's called 3C1. Right. I would say time factor wise, best if it's outside. In fact, you could even pull up to this level before it dropped, actually. So I wouldn't be surprised if this pull up a little bit more to this level. Then you can look for your sell. Look for a sell setup there. Right? If this wants to drop, let's see. Let's throw up some fit pattern and see what we get. 50. Sharp. You have to see what this is actually giving. This one in relation to that, it needs to go sideways. It needs to go sideways like that. Somehow, so that you form some kind of correct structure. Then it must break this way. Right? It's like a sharp sideways structure. This goes side, and then it goes up like that one time to fake everybody out. Then you put your sell stop here, then that's when it drops. This will be very fast. It will be very fast. You will see something like this, and this is normally what they call a fit pattern like this. But this one is not going to hold. It will just basically burst right through. So uh, basically, you see a whole setup here accompanied by this setup being a 3C1. You see this look where people will actually buy here as a bet or a godly. This here, I think, is a bet. It's going to be a bet, right? And this entire credit structure will then tell you, all right, I think this I don't want to buy. It's going to bring right through. So you could sell it down. Then from here, at the bottom, buy it up again for a quick sell down and then another buy up for one cycle like this. Right. So if you're looking to around this level, this will be a safe level, right? To think about it. That's the basic idea. Right. Okay, so Bitcoin, huh? The long term, right? Bitcoin, it would be best. It would be best if this one when it drops here, it goes back a little bit, it comes down again to this level, right? Basically, right, what you actually want to see on Bitcoin is you want to see this level get broken so that it forms a complete three-way structure, 1, 2, 3 this way. So if it just breaks even just a little bit, and I haven't taken the buy here, right? Definitely looking for a move that's going to be something like this, all the way up to the top. Okay, got it? 1, 2, 3. That's what we're looking for. So if you're going to spy the bottom, put a break even, and just walk away from computer for at least 2, 3 weeks. So, yeah, see, maybe you get extremely lucky, right? Uh, just a few I want to talk about. I don't want to go through all of it. Let's see which ones I want to talk about. Trades that I'm looking at would be, I'm very interested in gold. Very interested in gold. Okay, so the trade idea that we had for gold at the time, so looking for a buy entry at this time, basically. All right. Okay. It's at the time I was looking for gold to, if you could make it to a lower level here, it would be a good thing, right? Or the other one was it does a bounce, a corrective structure sideways, and then of course you're looking for this move up over there, which looks like what it's doing, right? So let's go look at the nuts and bolts of it. Okay, so right over here, this is what we have. Now, you notice this move came down, and then of course it ended, right? This move ended right over there. It ended right over there. And then you had this 1, 2, 3-way structure up. It depends on how you want to see it, how you want to call the 3-way structure. This will be quite sharp, but believe me, credit structures can be that sharp, right? It doesn't always have to be encryption doesn't always have to take too long, but just for simplicity's sake, we're gonna keep it simple. We 1, 2, 3 like that. So call it something like some expanding flag in there. Right? Then this is a credit structure over here. 1, 2, 3 correction. Right. Let's measure if we were taking a bounce. It's best if the bounce we took it right there. 707. Oh, and we got it. Wow. Okay. So definitely you're looking for the buy. So that's why we posted the buy. We're looking for this to at least come up to this level around here. This is good level to try to take some profit basically. Because big picture, I still see that it could go down. To be honest, I still see this. I think it's like a 1, 2, 3, 4, 5, a C anywhere here, and then there's one more down. There should be one more down coming. Right? It's like a wave count. But the reason why I'm just saying this buy is because of the setup, right? The setups that I see, it tells me that there should be one more up. Then after that, I'm looking for the down. Now, when I'm in the buy, I will most likely take off some of the trade because I foresee a down coming. All right. Or another way is just put a trading stop loss. See, in case it does fly, continue going. We can still stay the trader. That's also good, right? So, but this looks like, in relation to this still looks very corrective though. We'll just have to see how high it flies. How high it flies. Assuming it flies really high, let's say it flies all the way up here, breaks this previous stop, oh, but it comes back looking for a buy. So it really depends on how high this piece actually goes, right? That's very important. Is it coming down or is it going up? If it goes, shoots up to here, it comes down here, I'm going to buy it. If it kind of gives up around here, you see it's kind of tired. How it approaches a level is very important. It approaches in the very tired style. Impulse correction, of course, you're looking for another move back down, right? So it really depends on what we get. So as of right now, all I'm interested is to buy, and then I'll think about it when price gets to around this level up here. Right. So if you're already in because of, well, the bias, because of the setup was supposed to go up, then right now, is there any way to enter the trade anymore? Let me see. This one would have been sharp move, correct structure, and then the third way. Right? So it's not consolidating above the trend line, right? Above this trend line. So what you want to do is you want to see some kind of structure that allows you to some sort of flag would be good actually. So if we did something like that, yeah. Well, if you broke out significantly, right? In relation to the flag, broke out, and then if it pulls back, I'd say that's a good buy. That's a good buy if you get there. I wouldn't want to be the first one taking a flag. I would rather let it pull back and then take this one, right? Because otherwise you're going to live through a heavy profit and then giving it all back up. Well, but if you did take it and it continued to go, then that's good, right? Maybe it does not even pull back. So that's always going to be good and bad. And I prefer to be more conservative. I prefer this hook back, right? That means if it just shoots up straight like this, I'm going to miss a trade, right? If this hooks back like this is generally very good. It's good to enter this, right? There's usually more power for this way. It moves pretty fast. Right? It's like a break of this little correct structure here. They hook to there you go. So you want to see what this correct structure is going to do. If this one does like this stuff like that, yeah, that's pretty good for upside. What if it just drops like that? Well, then you don't really have a trade. You don't really have a trade to the upside because you need some kind of continuation pattern that allows you to take the buy, right? Yeah, that's the thing. But still, at this point in time, you're still looking for the buy. I'll still be interested in the buy. But the sell, not so much. Sell, not so much. So we're going to see what flags you're going to get. Let's go look at this piece to see what we actually have in there. Let's see what the story is. So we have, let me see. Okay, we have a 1, 2, 3-way structure. Next one. So one is it could form a flag. The other one would be it could still pull back down to this level over here. You can do whatever it wants and still pull back to this level. And if you decide to take a buy around this level over here, you need to stop. Would have to be, you thought this was the third way, this is the first, second, third way. It's going to go up some more. Then your stop will be below here. Because this is your anchor, see. The trade idea is that this is going to go up. You just retrace, collect orders around this congested region here before it goes up again. Now, if it just pierces right through, well, then of course you're going to take the loss. It means the trade idea is not working, right? So the trade idea comes for the upside because you want to get to this level over here. And then from there, our bias, from here, the bias is up. From here, the bias is supposed to be down. But a bias is just, that's that bias. It's not, there's no confirmation that it's going to get there. The setup limits our risk. We feel that it's going to get there. Our spidey sense says it's going to get there, but you need a setup before you take trade. Otherwise the drawdown and the risk is exponential. Just click a buy here. This could just say no stop loss. Well, this went all the way down, the account will just go bust. So you need a setup, right? So a forecast without a setup is pretty much useless, right? This forecast is just if you play poker and then you expect to get the 5 cards we already have. No, we already have 4 cards. We expect to get a king, And then you just play the probability that we can get a king, right? So this is a just probability thing. That it's gonna come here, it's gonna turn. But if we're wrong, you still have to get out here. So the risk reward is going to be you're going to look for something like this, right? So you're gonna risk this to make that. Right? There's always going to be some risk that you're going to look for, right? Um, Again, will it do this? It might not. Right? You could just form a flag right here, and then you just form a flag right here, and then of course it could go, or maybe from here no flag, you just chuck out like this. Then of course we won't be in the grade, right? Because we didn't manage to find a proper setup. So the setup is very important. Okay, if you don't setups is the bread and butter of trading. Right? That's the thing. What else? Okay, goal is done. Let's look at let's look a little bit more at dollar yen. So the trades that I'm looking at, dollar yen. What do we have here? Okay. Five C1. Okay, 5C1 ABC. The idea for this is if you could make this move pretty sharp, if there was a correct structure, one more down, to complete this move, 1, 2, 3. If you did that, anything here, this would be a good buy to the upside to break this high. So yeah, so the idea is I think we're looking for the sell down, followed by the buy up. So let's go look at get the sell. So it looks like it's setting up for a sell. Looking set up for a sell right now. Let's see what we have here. So let's go study this piece. Look at the 30. ABC. Okay, so you got the first move, you got the red, you got green. So let's look at the time factor for this one, as opposed to that one. And you feel that the time factor may not be sufficient, no? See that? So you want to sell it over here. Now, if you ask me, do you want to sell this now? Not really. Not really at all. Not really at all. The timing is just not right for this. Not that it couldn't go, yeah, but if it really went and it pulls back, that's where you want to sell, because that will tell you whether or not this could potentially become a 5-way structure, right? But right now, I see this just this and that. You wouldn't really know. Right? So what you would need is you need to wait for this one to come out first. This come out. 1, 2, 3. You want this to come out on the structure first, and then if you're lucky, you're looking for this one to be a little bit higher. Gives you a step, stairway to earth like this. One pullback, then you can sell it down, just like stuff like that. Then one pullback, and then you can sell it down. Except that this one is going to go much further than this piece. This piece is not so short. This piece will go because it's like third wave of this one. So you want to see that confirmation before you actually take the sell. And the sensation would be you would have missed the trade, because when you see this, you thought the trade would have gone. But never mind, just put a sell limit there, because this is your confirmation pullback sell. Your stop where will be right at the top. That's it. Right. This is supposed to give you confidence to take that bounce. If you lose it, you lose it here at the top of the structure. And at this top would be fine also. Right. Dollar yen. Yeah. So that's what we are waiting for. And let me see what other traders are doing right now. Okay. Other traders who are doing time factor, let's see what they're doing. Okay. Let's see what they're doing. Okay, so Mr. A says he wants to share another example of precise timing on euro dollar. So He said that the FIP zones, okay, over here, see the FIP zones and supply got pierced through, but timing worked really amazing. So Mr. A was didn't use time factor, but now he's a time factor trader. So let's see what he did here. He was saying that he's looking for a buy outside the box. Yeah, that makes sense. Euro dollar. Let's see what he was trying to say. Yeah, let's go look at euro dollar. Let me just clear out everything. Let's go to the 4 hour. See what he was saying. He's looking at the euro dollar. Okay. Okay, let's go look at 8 hours. Here's one move from up here down. Okay, so let's go look at this one. I think that's what he meant. Supply got pierced. I think he meant demand got pierced. This is demand. Supply is at the top. So basically, he must have taken the buy somewhere here. This was what he meant about this. So basically, you're trying to apply time factor into his trading. This part will be this part over here, right? That's time factor trading for you. So he says, forget about all the flip stuff. Time factor is the best. Well, okay, great. So let's see how far this is actually going. There is a chance that this could go break the top. And the reason for that is you're looking for something like a 5-way structure. 1, 2, 3, 4, 5, right? Followed by C and then one more up. Right? So you're looking for this one to go break the top, basically. Oh, this is a good buy. So euro dollar, look for the buy. This will be a good buy. Okay, so Mr. A had a big loss in his account from 80K. He dropped to 20,000, and basically he lost almost 50 to 60K of his account size. And then he came searching for me. He's from Russia and I'm from Singapore, so we are in different time zones. But he sought me out quite a couple of times, and finally he got back his high account. Talking about 3 months, which means in the span of about 3 months, he made around 50K off a 20K account. Now that's pretty exceptional. It's pretty good because the thing about him, he already had some basic good foundation, but because the more people he spoke to, the more confused he became. So when we met, I really felt that he had some good understanding of Forex and just needed someone to guide him on the path to success. So good for him. Then he's looking for the buy. That was pretty smart, right? So, all right. I'm going to look at one more question that came in. And the question is, let me see what the question was. Okay, the question was, hi Sherman, do you consider your bet size before I retrade? So how much do I actually put down on the trade? Yeah. Okay, when the typical answer, right, would be to risk 1 to 2%, correct? Well, risk 1 to 2%. But to be honest with you, let's say if time factor was perfect, right? Say over here. So let's say I'm looking for entry right here. And I see a trade where it's doing a stairway to heaven like this. Pull back. This may not be 1 to 2%. It could be I may risk as much as 5% on the account. Because to me, the way I approach swing trading is a lot more like poker, right? If I think that I have 3 of a kind or I have a full house, naturally my bet size, I'm going to risk a lot more, right? If I have a royal flush, and I'm playing, say, $1 million, $1 million per person type of buy-in, right? I don't know. I'm not a poker player, yeah, but if I had a full house, would I put $10 down or would I go all in? So that's the way I approach it. If I think this setup time-wise is good, and I see, starting the price action starting to print higher highs, then naturally I want to risk more. I risk instead of risking 5% or instead of risking 1% or 2%, I'll risk a lot more. And that's why sometimes my account suddenly bursts from like I seem to be not making much trades, and all of a sudden I made 34,000. So the first week, second week, we made very quiet. Suddenly on the third week, fourth week, the account grows by 1K, 2K, 4K, 8K, 10K, pop, 30K. Right? Because this takes time to mature. This takes time to mature. Right? There's a time factor there. So in answer to the question, when I look at a bet size, it really depends on how confident I am on the trade. And I don't typically just risk 1 to 2%, basically. Because if you're into time factor trading, right, the longer when price action just does this and that, you wouldn't really know what's going on. But if it does this and this, does this and then it does this, and you can see this and then you see this, it pulls back like that, you're going to buy that very big lots. Very big lot, 3 to 20 lots. You would buy it. I would buy it. Then my stop loss would be right over here. Because I might lose as much as 6K. 6,000, I could lose 6,000. But I'm looking to bank to make that amount of money because the whole time. But if you just give me this, I say, okay, maybe I'll put 3 minis on it because I'm going to be averaging down. Because I know that this move up here probably isn't going to break the top. But this one tells me this move here is going to break this top. Basically, that's how time factor traders would do it. Okay, so I'll call a wrap today. Thanks so much for joining me.